Hi, my name is Theresa and welcome back to Theresa's Soapbox. Today I'm here to talk about how can I figure out if I qualify for a mortgage part 2. Now today's focus is more on pre-qualification and pre-approvals, and I just wanted to let everybody know that there's a lot of lingo, but there's no real standard accepted definition for each of these things. So a pre-approval from a bank may mean something different than a pre-qualification or a pre-approval from me. So I'll let you know what are the actual aspects within a pre-approval or pre-qualification that you should look for in order to determine, if what you've got in your hands is actually sufficient for your needs. Now, number one is the pre-qualification itself. So if you've listened to our last blog, you know that we're looking for things like your income, your debts, and your credit history, and taking all that information, forming a picture, and determining how much money you will be able to borrow. Also what interest rate you can get for that money, and finally the amortization period your payments will be structured within. So to determine if you had a full pre-approval or pre-qualification done, you'll be able to get a piece of paper and it'll say, based on all of this information, you actually qualify for a mortgage of X amount. There's no range, there's no depending on this or depending on that. It's either you qualify for this amount or maybe you don't qualify at all, and we have some suggestions for what you can do in order to qualify for the amount you're looking for. The second thing that I find is very important is a rate hold. Now, a lot of you out there have rate holds, some of you don't. You think that, if the interest rates go up a little bit, you'll just get a rate hold then, but you won't really bother to do it now. So there's two things that you're risking without a rate hold. Number one is obviously if the interest rates are higher, you pay more in your mortgage. But number two, I find a little bit more important, is that if interest rates are higher, you actually qualify for a smaller mortgage amount. So think about this, if you've been out there shopping and finding a house and you finally find your dream home and you go to finalize your mortgage, but interest rates are a little bit higher and you come up, $10,000 short, what are you really going to do at that time? Because you just can't get as much mortgage as you thought you could have gotten. The last thing I find is very important is documentation. You've provided all this information about your income, your debts, your down payment. You do need to provide documentation in order to confirm these facts. And if you wait until the very end, a lot of people wait until they're finalizing their mortgage at the very end in order to provide these documents. If there's some surprises, if the numbers aren't coming up the way we thought they were in our application, if your employment status is a little bit different than you thought it was, because that's not something you control. You don't write your own job letter, your HR department does. Well, then at that point in time, it's already too late. You jeopardize your entire mortgage application if we cannot confirm these documents the way we think they should be written. So if that's confusing to you, give us a call here at Finder Financial Services. We'll let you know if what you have in your hands is sufficient, if it's a pre-approval, if it's a pre-qualification, or if you really need to get a second opinion. And if you like that, subscribe to our YouTube channel over on the side, and I will talk to you next time. Bye-bye!